Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a daily chart. And you know that we've been looking at the S&P 500 in terms of its move down from that point down to this point as 108 days, and we're looking for 44 days here, which will be the same as what occurred in 2000 and 2008 in the same sort of wave structure to the downside. So that would play out on Wednesday the 7th, and also understand that the Europeans will be meeting on the 8th and 9th of the coming week, which would be the Thursday and Friday, and they will have an outcome of pulling some sort of rabbit out of the hat. So, look, the markets could duck and dive either way from that situation. The banking sort of cartel, if you like, that on credit that have lowered their rates to give out credit in this particular move through up here. This has happened twice before. Both times it's happened before in the 2008 beginning of bear market and towards the end of the bear market. Both times the market rolled over and went down from that point. So as you can see here, we were aware of that, and we were looking for some follow through volume here, which never really came through, never really moved up from here on the Friday there. The important point here, I guess, is that the price now is meeting supply here. So sellers were here, here, and they're getting lower and lower. So they're obviously moving down. That's where the supply is, the sellers. And that's what the market's meeting at the moment. So it'll take a good sort of foundation and some positive news to push that through that supply there. And until we've got support, say on the 12,000 here, and we can recognise that we've got some sort of corrective pattern occurring here for foundation to push to the upside, then we have to be really careful, because this move up through here, meeting supply here, can just roll straight over from there. And when we look at the wave count for that on the 2-hour chart for the Dow, it's a move that's in 3 waves and it's corrective, so that can be the top there. We're looking for a 12172 to 12200 top there on the Friday, and this little move down through here, which we can look at a little bit later on the S&P 500 and the Dow Jones and so forth, and on our local market as well, is actually in 5 small waves. So we'll get 5, 3, and 5 down there. Now, will that 3 waves, that A, B, and C coming down here, will that turn into a larger 5 waves? Because if we get that 1, 2, 3, 4, 5, then we're going to get a larger move down once again as well, because we'll be getting impulses to the downside. But just coming back here for a moment, all the US markets and our local markets and other markets around the world are all meeting supply through here, and we really need to before going on committing long, we need to figure out if this supply here is actually going to become the resistance, and there's no evidence of that so far. So in terms of being of trading, then would only be sort of selling into buying into risk, and that's not such a hot idea. As I mentioned before, it's a game of support and resistance, and we'd want that this here to become the support here. The other guiding factor is that this move down through here, this 1, 2, 3, 4, and 5 here, that's an impulse wave to the downside. That's 5 waves, so we should get some sort of correction here, and we're getting that, and then we should be moving to the downside. Now, this correction could come in terms of an A and a B and a C, and it might even pop its head up through here and then roll over to the downside. If it's going to roll over to if it's going to move up through here, it will be sort of short-lived, and we'll be looking for 5 waves here like this. And that's kind of what we're seeing on the Australian market, actually. So if we have a quick look at that little structure there in terms of the Australian market, let me find that for you here. Not that one. Drop that there. Okay, this one here. So this is on the SPY here from the 4,000 here, and we'll be looking at 5 waves going up, the 1, the 2, and then 5, then the third wave coming in, which is, I don't think, finished just yet, to here, and that would be 5 waves in terms of 1, 2, 3, 4, and 5 coming up to here, but that's not finished yet. There will be 5 in 1, 2, 3, 4, and 5 here to finish the third, then the fourth, then the fifth. that could be the structure to the upside. That's what's unfolding. But as I said, on Friday on the US markets and our local markets, this move down here is in 5 waves. So that's going to give us 5, 3, and 5 at least. So we're going to get an A and a B and a C through here. But that could turn into a larger 5 waves to the downside. The 1, the 2, the 3, the 4, and the 5. And if we get that 5 waves there, then we'll get 3 back, and then we'll get another 5 down to the downside. So it's really important that that we understand both counts at the moment, and this is the one for the US markets here as an ABC. And as I mentioned the other day, as this goes up through here, there'll probably be no follow through, and we need to be careful it doesn't roll over. And we weren't going to race in there where sort of angels fear to tread, so to speak. We need for that to play out, and it's playing out, and there's nothing really much we can do about it. It's a little bit of a guessing game, and we sort of need to get through that. We do have long trades in the market. We have a good dozen or so in the market there, and we'll be looking at protecting those at these current highs as well. But we'll talk about that a little bit later. So yeah, and this is just coming back here again. Sorry to bore you to death, but this, on the Dow Jones here, this is the same for the Dow transports as well, coming back up and meeting supply here. So these are all the US markets, and most markets are like that through here. So they're running into that resistance there, and they can roll over from there. Sure, we can expect them. We don't need to jump the gun either. We should expect them to struggle somewhat anyway. Do you know what I mean? And from that struggling there, but we need to see if that struggle and that sell-off is actually a corrective move to the downside. We need to see if it's essentially in 3 waves like that, not that far back down, but there, and we could really only turn sort of positive, once we're on sort of some large numbers here. In this particular case here, the Dow transports being on top of 5,000, then I'd feel safer about going long. I don't feel safe about going long while we're facing supply and resistance. It's just not worth the risk. It's okay to plod along with a few positions here and there, but nothing sort of serious until it's basically it's come down, it's checked it, and then starts to move off, and that's what we would want to see here. So there's a lot of time here, and that could possibly happen. But yeah, we just got to sort of play that out, and that's the same with with all the other markets as well. The Wiltshire here, which is a larger sort of variety of 5,000 companies. The world stock market hasn't moved up as much as well. You can see the nice 5-wave structure coming down through here. So in one way or another, that can be the A, B, C to there in this particular case, but it's probably more likely that this is the A, the B, and the C, what we discussed on Friday as well with Mick and Shane's work as well. So that's what we're looking at. All I'm suggesting is that coming into this supply region here, that we would see some problems there, and just coming back to that, while we're talking about that, this weakness coming down through here, we would see that in terms, we'd need to get confirmation of that from other markets, and we are seeing it from the 30-minute chart here on the US dollar as well. So if that low is in place there for the US dollar, we'll see this US dollar push to the upside. And while we're seeing that, we'd obviously be seeing the euro push to the downside as well. And that's certainly doing that as well. We're not, the euro's moved, and we'll come back to these. The euro has moved to the downside through here on this 2-hour chart through here. But the US indices really haven't, or the S&P 500 rather, really hasn't confirmed this stronger move down to the downside. But we may be seeing the lead coming from the euro and the US dollar, so we'll keep that in mind. But the treasuries have kind of confirmed this as well to some degree, but we just need more evidence. That's all. But we just don't want to put ourselves at risk with too many long positions there without really good support. The Asian markets are stronger than the European markets, but there is a relationship between the Australian markets and the UK market, as there is with Singapore, and well, of course, we're sort of with the American market as well. But the American markets have moved a lot differently from what our markets have when you look at them on the charts, so to speak. Okay, so as I mentioned, the this little move down through here on the S&P 500 and also on the Dow Jones as well. We'll have a look at that. But this is the other side of the coin. So the negative side is this is the C wave up here. So basically an A and a B and a C, and we'll roll over from there. We'll have 5 waves down, 3 waves back up to the 1250 on the S&P 500, basically locking it in there, and then moving to the downside through there. So that's a real possibility. Otherwise, we would see this as the 5th wave here and an A and a B and a C here. And after that 3-wave move, if it finds support back on the 1250, then we can look to go to the upside, and then we'll be looking at wave 3 there. We'll create this wave 3 as the top here, and we'll be looking at a wave 4 to here, and then a wave 5 to go up in terms of the 1, 2, the 3, the 4, and the 5 to go up there, and then we'll have a larger ABC pattern. So yeah, all sort of interesting, but we just need to get through this, and we just need time at these levels here. What we're seeing on the S&P 500 and the Dow Jones, and on our local markets as well, from this high here, it's basically down for wave 1, back for wave 2, and then we've come down for wave 3, a little bit dodgy, but still 1, 2, 3, 4, 5, and then the 4th wave and the 5th wave coming down through here, and that's the same for the US 30 as well. I just sort of counted that out before, but down for 1, back for 2, down for 3, 4, and 5. So that should, that should give it, because we've got 5 waves there, when that finishes, we'll get a 3-wave counter trend, and then we will get another 5 down as well. So this is why some of our positions on the Australian market on the daily robo system should be protected now, because we've got that 5 waves down. Okay, so yes, we'll get 3 back up, but we'll get another 5 down after that. Now that could turn into a larger 5 waves down. So it can be 5 waves for the A wave, a B wave, and a C wave as a bullish correction, then move up from there. But it could also develop into a larger 5 waves where we have down for 1, back for 2, down for 3, back for 4, and down for 5. And if that's the case, then we're going to get a larger picture to the downside as well. So that's a bit of a concern. So it's better to be safer than sorry and protect while we see this first little impulse wave down through here. So we need to sort of lock and load, so to speak, and protect your asset. Right. It's all pretty much same for the other markets, the UK market as well. Same pattern to the upside, same little pattern to the downside here. We understood that 5 being the second strongest number in the market, that would also see the support come in at SG2 here. I thought this might have stayed in closer here, but he would go up here. But either way, this market is dealing and working with the 5,500. So we just need to allow it to do that until we can see what this particular pattern is. Are we going to get an A and a B and a C wave to here, and then we move up from there? Or do we get 5, which will be for wave 1, back for wave 2, down for wave 3, back for wave 4, and down for wave 5? Because we get that, then we'll get 3 back up and then another 5 down. So that would really seal that in as the top at that point there. So we'll watch that. And that's the same on the DAX and the NASDAQ's not much different either. And we've seen that on our local market just then. So what we're seeing on the SPY, basically, this could also be a top here or here in terms of lining up with the Dow Jones. But as it stands at the moment, that little 5 waves down through here, we should see support in that into the little sort of SG2 area there, and then 3 back up here, and then down again. So we should see 5, 3, and 5 through here. So Monday, we're not going to see a lot through here. We were hoping on good follow through. We got good sort of follow through on reasonable follow through on our local market with price and volume. So there'll be enough support there to stabilize our market on the Monday opening there. So a good time to protect. Okay, so the gold market, bit of a reversal day here on the daily chart here. We can see this trend line coming through here, just sort of keeping it sort of simple through here. We're kind of looking at this as an A and a B and a C, and finishing in here somewhere. If we have a look at this on a smaller chart through here, because this is a corrective pattern through here. So once it's finished, then it'll move to the downside. And the US dollar would be putting pressure on gold as well. And on the smaller version here, we've just been looking at, this is a 2-hour chart, and we're looking for sort of a top to come into play here. Now, in terms of we're a little unsure about which way the US indices are going to duck and dive, and also the bodies that be at intervening in certain situations, and that will be happening on the 8th and the 9th as well. But in terms of trading here, the 1750 is the midpoint, and having that as support or resistance really creates the bias being long or short. But in terms of actually trading short, we want the 1720 here, the 72 as the resistance, and then we can short from that period, that price point there. If support is found on here, then it will come up through here, but it will have a lot of problems at the 1772 there. So I really wouldn't go long until that became the support area there. So once again, we just really want to see this play out here so we can pick up the direction of it. But once again, just got to, I just don't think we should be near this market here, because there can be a turning point through here. We can obviously see the supports through here at 1772 and the 30 here, and a little trend line through here. We can see the resistance here, and if it does, this is likely to be some sort of A wave here, some sort of B wave here, as you can see in 3 waves, and a little C wave here. So it can find support here and then climb up there. And if it does climb up there, well, then the bias would be long if that 1750 was a retested support, as that's a retested resistance there, and it's working its way across here in a classic trading levels, classic pattern there. But it still need to find support on here now that it's done its correction across here. So it's just a waiting game there. Silver's much the same as well. Kind of considering a top being in there, and there'll be little 5 waves in here, but we want to see a retest of that there. We want to see that locked in there with supply sellers there, and then move down from that point. But this is 31, 32, and 33. This is the midpoint within that there. This would have to become the resistance, retested resistance, for the larger bearish picture to emerge out of that. But if that became the resistance, then you can look to build in a short position from that point in a safer way, basically. But while the price is above this support level here, then the market is supported. Copper's the other one as well. So with copper, we've been lining this up with our wave count in terms of the Australian market as well. And with the ASX 200 SPY that we just had a bit of a look at there, it's pretty much the same sort of wave count up through here, and we'll continue considering that particular wave count in line with our local market as well. However, if this, we can allow a correct, this is the midpoint here, the 350, we can allow, this market to have a correction across here. But if it finds it can come below there into the 347 area, and maybe under 345, it's pretty much doomed after that. But if it found the 350 as a retested resistance, then we'll have a bearish bias on our hands at that stage there. So that can be very handy in trading the SPY or the Australian dollar as well. Now, there's a few announcements coming out this week from memory. There's the ANZ jobs coming out 11:30 on the Monday there. That'll be important. The US manufacturing figures, the PMI, will be coming out at 2 a.m. on the Monday in the US. So that could actually soften things somewhat, or it could pick them up. It will be a little catalyst within that. They're expected to be up, so we can get that ABC bounce on the Dow Jones. And on Tuesday, we've got our cash rate coming out, which could be lowered. I don't know. It's just a guessing game, and I'm not a specialist in that particular area there. But that's 2:30 on the Tuesday. And we've also got on the Wednesday, we've got our GDP figures coming out 11:30 as well. So we've got stuff happening on Tuesday and Wednesday that you need to be aware of. And also Wednesday, once again, as well, we've got employment figures coming out Wednesday as well for Australia as well. So be aware of that. Nothing on Thursday, except nothing on Thursday, the employment figures. But Friday, we've got the Chinese PMI figures coming out. So there's news coming out each day. So they will rock our market somewhat. So be aware of that. The market that I've seen sort of most positive to the upside was was oil, and here we've got 100 through here. One's the strongest number in the market, be it $1 or 100 or 10 cents or 1,000, whatever. Psychologically, people will find it as support or resistance, and it's a very nice sort of pattern here in terms of support and resistance, because here it's resistance, here it's resistance. We never chase the first high through the level. We always wait for support to come into play, and we can see this A, this B, and this C here, and we're starting to see little 5 waves up here. So that could be viewed as a wave 1 and back for wave 2. So if support develops on the 101 here, you could look to add to that and then onto this one here. So that is that's supported there. So the stop would need to go under the last low here, and certainly under 100 as well in that terms there. So the under the 72 there, so 99.74. So you want to be under the 99.72, which would take you down to the next level would be 99.63, and 57 would be the number after that. Pretty much always 7 or 3 when you're going long in the market as stops. Okay, I think that's pretty much it. We'll just have a closer look at the dollar as well, and the Australian dollar and the euro as well. Now, I was expecting a wave 5 to come down through here, and it hasn't come. It hasn't made a low below here. Technically, it doesn't have to. It's just a nice way to do it. And sure, this could be part of some sort of corrective move through here, but at the same time, it has got support there. And if it develops support at supply levels up here, it should push up, should find support on the 72 eventually, and then push up to the 79. Yes, it will have a corrective pattern across here, but after that, if it finds support, then it will push further to the upside and move up through the 80. And it could push up, well, it should push up when it's finished this correction here to the upside here. And this would be the A, the B, and the C wave to here. This would be up for 1, back for 2, up for 3, back for 4, and up for 5 through here. Any push up through here is obviously going to be weak for indices, and that's what we've been looking for. And on the euro, on the flip side of this with the euro, we've come quite firmly to the downside through here. So this is a corrective move back up through here. Once that finishes doing what it's doing there at the 134, it'll check it in as support or resistance, and resistance is more likely, and you could use to be short there and adding under the 1372 there as a retested resistance. But yes, that could seal that in there now as the high for the euro. And yeah, it's just it on the 4-minute chart there. So if that becomes the resistance through here, then look to be short under the 72 there as a retested resistance. The Australian market as well, as I mentioned, there's a few things to rock the boat here, but pretty much if copper stays above the 350 there on the US, then that will be fine. Just looking at this in pretty much the same sort of wave count as we looked at the SPY with, and yeah, it hasn't retested the $1, so that's always a bit of an open door there as such. But if it finds what this is group 1 here, so if it finds the 102 there as the resistance, then the bias is bearish to the downside there. If the 102 becomes support, if this spikes down through here on a softening on the weekend following the euro down, rolling over at 134, then it's just about seeing the retest into the 102 there, and if that fails, then you want to be sort of short from that point there. Any support on top of the 103 here as it comes, that's the top of group 1, subgroup 1, so that would separate the price from the $1 there, at least for the short term. And this is only sub levels, not minor levels, because this is a major level here. But support on here would get us to the midpoint here, the 105, and that's what you'd be looking for. But expect this move down through here in 5, a little rally, and then back down again through here for a wave 4, could support on the 101 there. And if it starts to push up through there, then look to the long side being supported on the 102 first. That would be where the first long comes from, and then expect a correction at the 103. But after the correction, if support is found, then get to the 105 there. So But with the euro moving to the downside, be very careful, because it can just come back to here, and that's if the 102 there it becomes the retested resistance, then you'll be looking at that to the downside there. And you can see here on the Australian dollar on the 2-minute chart, you can see that we've got down for 1, back for 2, down for 3, back for 4, and down for 5. So we've got that impulse wave there. So after this particular A, B, or C, whatever's going to occur through here, coming back under here. So that 102 is really sort of critical in terms of creating the buyers for looking for long-term trades, long trades or short trades at that point there. Okay, just another little thing here, looking at, just bear with me for a second here, looking at the material sector on our local market, I think is important. You can see that this is the move through here, and just wanted to point out that that's the medium level through here at 11,500 there, and it plays a part, as you can see through in history here. But if this becomes support on the 11.5 here, then you've got a basis to push for the upside through here. But just be aware it's facing that. It'll also be facing supply there. So how it deals with this here is really important. You can expect minimum, you can expect some sort of corrective pattern across it like that. But after that sort of pattern there, if it finds support on top of it after that, then you can go along. That's when you get your timing right, not when it pops its head through here for the first time. You can't do that. You need to wait for that it's got some sort of support here before it moves on through there. And also just the importance of all of this is, if we have a look at the XJO here for a moment, this particular pattern through here is a little bit sort of haunting in lots of ways. We talked about it essentially having a little 5-wave push to here on the Friday, pretty much like that there, and then sort of rolling over from that point there, rolling down for another 5 waves down to this point through here. Like that. And this particular, if this did occur through here, where we've got this particular pattern through here in terms of whichever way you want to count this, I won't go into that because there's different ways to see it. I don't want to debate about that, but what we can look at is we can look at this swing to here. So that basically 1, 2, 3, 4, and 5 to here. Not that that's an Elliott count, just saying that 5-wave swing. This has actually occurred before with a 5-wave structure moving down through here before, and that was in 2003. So if we come back way over here, I know it's stretching the memory a bit for some of us, but there's the same pattern again through here. So it was pretty much what occurred down through here, and this is what occurred here. So really we're kind of in amongst here at the moment, with another push up through there. So it's that's why it's important not to get caught up in in being a real bull if this top gets taken out through here, not to get too excited about that, because this is what we could be facing to the downside through here. So this pattern here is very similar to what we're facing now, and yes, we're sort of we are trading up through here, but with a lot of caution, put it that way. So yeah, coming back in over here to this pattern here, it's a little bit different, but it's quite similar in its makeup through there. And here's a picture of it once again through here. So it's something that you could have a bit of a look at yourself. But that's the area that we're concerned about. Yeah. So we'll see what happens at that point there. If we get support on the top of group 1 here, which is the medium level here 4, so we've got 100, 200, 300. If support finds itself on here, then we can move. If this is the case here, if we're going to see a bullish picture, then we'll see this. We'll see that 5 waves up there, just like we're counting on the SPY just a moment ago, and we're just in wave 4 here at the moment on that. then we'll see 5 waves push up through here, up into the 4-4, maybe even higher, maybe, maybe into the 4-5 it could even push up to, but it doesn't really matter how far that 5th wave goes at this stage. But if that does occur, then we'd be looking for a 3-wave counter trend like that for the bullish picture. But if we got this move here, which would be 5 waves down, because that move there is 3 waves down, if that move there became not not just 3 waves and ending, but in terms of 1, 2, 3, 4, 5, then we would have this larger picture down through here. But we will probably know what's going to occur before that happens, because we'll see it show up in the euro if indeed the euro is leading the way down, and we'll see the US dollar push higher. So with the US dollar and the euro, they would be leading the ways. The treasuries will be very close behind them, and it seems the S&P and the Dow will be lagging somewhat. But we still got to get through the euro meeting on the 8th and the 9th. Alrighty, well that's enough rabbiting on, but that's sort of how it is. And so any long trades we have here at the moment going up here, we've got about 13 of them. We'll need to look at locking in profit and protecting those, and we'll see what to do. It'll be a little bit sort of trickier up here unless we get a nice clean turn, like we were short coming down through here, and then we will started to remove those and started to build in a long trades into here. So now we need to reduce again to find out if we're going to get support or resistance on the 4,300 there. Alrighty, good morning and good luck.